We've got all the factors we need for a market sell-off again. Now, the stateside volatility we saw in session, China selling off in late trade, and the oil pressure under further stress this morning. So we are opening up to the downside. As you can see, more red chips starting to appear on this heat map behind me. On balance, so the stock 600 down 0.8% as the starting position out of the gates. As we get warmed up, let's just cast out and see how widespread the selling is on the market open today. You've got to anticipate that it's going to be fairly broad, and it is indeed. Every sector is in negative territory again on the open. Oil and gas, the weakest performer. We've been down about 3+ % on Brent and WTI this morning alone. Over the course of the week, we lost about 6.5% on Brent, about 7.4% on WTI, as investors have given up the ghost on this one, despite those gains you saw, as it was suggested there was a bit of short covering and profit taking on those positions taking place at the back half of last week. But that momentum has well and truly faded if you look at the trade this week. So 2.6% lower. Now every stock in the basket trading weaker in the session. Basic Resources going with it, not much in the split there. As you see, most of those stocks, the big ones, Glencore down 2.7%, the trading level 78.54 currently on it. Banks, this is one of the other thorny parts. We haven't been able to see our way through the non-performing loans in Italy, and despite all the commentators we're talking to saying a lot of this is priced in, the fact that you've got the regulator, the ECB, pouring its eyes again over what exists in the banking portfolios has just caused jitters on an already weak market out there. And you've thrown into the mix yesterday a lot of Spanish stocks too under pressure as the formation of government there is proving tricky. To the downside this morning, the ones under pressure, the likes of Standard Chartered Bank, Santander, you've got the French names SocGen down 2.4%. So right across the board, you're seeing those stocks under pressure. Insurance is tracking weaker. Travel and leisure not getting any upbeat news there either. The sector down 1.5%. Utilities weaker. Industrials are down 1+%. You can see some fairly hefty losses across the board here. Food and drink, the so-called defensive play, is also shedding ground 1% south, and similar picture too for autos, with every stock in that basket trading south. BMW the worst performer there, it's down to the tune of 2.4%. So across the board, as we look at a sea of red there, this is how it shapes up on the individual indices here in Europe. The FTSE is down 1.4%, the French stock market similar split. This is an acceleration of the losses we saw in trade yesterday. We were down modestly in this session, so much higher than the 0.4% 0.5% we saw coming off the major indices. 1.5% down on the FTSE mid. The Swiss markets opened up down to the tune of 1+%, and you can see in Spain itself, 1.7% south, and some of this down to the Spanish banking sector again. We're waiting for a firmer print on the Xetra DAX after yesterday's close. There you go. First print 1.4% south, in lockstep with the rest of the European markets. Well, another late sell-off sent Chinese stocks tumbling by more than 6% at the close. At midday, the main markets were down just about 2%, and you can see that acceleration just tipped the balance for the broader market. Some of the China-exposed stocks here this morning, this is how they look. I've got to say the worst performer on the boards is ArcelorMittal in Spain, down 4.4%. I mentioned BMW being in the thick of it this morning. Saint-Gobain shares tracking south, but so too some of the luxury consumption plays. And the worst one here, Richemont, the watch and jewellery producer, 2.8% south. Well, Chinese oil majors were all deeply in the red, and that follows a torrid session for energy stocks stateside. The S&P energy sector saw its worst daily performance since the August flash crash. This is crude prices dipped back below that $30 a barrel mark. It seems as though 30 is no longer any support handle for oil on the spot price, and you can see the prices for the individual stocks themselves heavily hit again. Royal Dutch Shell 3.3% south, Repsol similar amount, Statoil, BP, you can see 3% marked to the downside. Commonplace across on these stocks, 2.75% for Total. Eni also seeing some selling this morning. I want to get to one corporate that has been reporting in the past 24 hours, Siemens, which has raised its full-year guidance following a 42% pop in its first quarter net profit. The German engineering group beat the street on industrial profit, orders and revenue, all this largely thanks to the weaker euro.